The next question we're taking is on, I believe we've got Zomato, right? So Suresh from Hyderabad is asking about this, bought at levels of 257.5 or thereabouts, 200 shares for a period of 1 year. And it's an interesting counter because, Ashish, we saw the results not too long back where the platform fee is going to be hiked or has been hiked by 66%. And in the past, we've seen a significant improvement to the revenues for the company when this has been done. Ahead of the festive season, this is being done. Do you anticipate a significant shift in the kind of earning potential that this company has? And would you buy more at this point? Would you hold on?
Yeah, I like to remain invested in Zomato if you ask me. There are a few triggers. One is as Swiggy IPO is around the corner, and if we see the breakup of Zomato and Swiggy, so they are owning almost 57% market share, which is 42 by Swiggy. So they'll be always market leader, and as Swiggy share will list at a premium, so Zomato valuation will go up. One thing that market may not be liking is they are already sitting on around, I think, in 9-10,000 crore of cash. Still, they want to raise 8,800 crore fresh money. For what purpose they require money is not clear. And third, as far as fundamental concern, now you are so much addicted to take help of Zomato for your food ordering or booking your restaurant. At the same time, that quick commerce by way of Blinkit, where you get everything 10 minutes. So these kind of businesses are disruptive businesses, and they will command their own premium. So I'm not that bearish in Zomato, and it's a part of long-term portfolio for sure.
Fair point. All right. Raghav's got a question, and is this a good time to enter into an index-based instrument? Now, normally I do not take a question on the benchmark, but Brijesh, I'd like you to reiterate what your view is for the long term on the Nifty 50. Where does it find support, and what are the key resistances that you would suggest? And I know that you said that this is a sell on rise market. So if you zoom out a little bit and you talk about what your strategy would be, at what point would you be a buyer?
So, Alex, as I've been said, when the show started regarding the Nifty, already it has made the head and shoulder pattern which comes on the bearish part. And if we take out the support of 26,277, that was a head, and if we consider the lows, and if we draw a daily chart and we draw a line that comes around 24,700, keeping that thing in a mind, and if we draw the target, downside target, comes around 23,350 followed by 22,000. That is the one part. Now, since 24,000 also was a previous swing low, the low which was made, from there we have seen a rise towards the level of 26,277. So anyhow, this 24,000 is a crucial level that should not be wiped off. If anyhow this goes, then as I have said, 23,500 or 23,700 would be coming into play. So if someone wants to go for purely for the CAD bounce, in the Nifty has been considered, 23,700 would be the level where one can buy with a very, very strict stop loss of 23,500, and then play for the target of 24,100 followed by 24,250 mark. But I feel, as I've been saying again, the trend has been changed. It is not buy on dip, it is sell on rise strategy.
Rise, all right. The next question is a fundamental question. It's from Kishore Nirkar, who's writing in asking about Life Insurance Corporation of India. 15 shares he's bought. He's been holding for quite a while. And in fact, he's bought at levels of 889, not too far away from the current market price. Ashish, on the fundamentals, would you hold on?
Maybe I like to hold on with some stop loss of say 870 or so. I think the stock is already hovering at this level for quite some time. So keep a stop loss of 870 and hold. It may not give you 1,200, 1,300, but at the same time, maybe 950, 970 is possible in any reversal in the market. But keep a stop loss for sure.